For today's video, I want you to picture a realm where you have a magical kingdom and a financial giant colliding, and the fate of media is riding in the balance. Well, Nelson Peltz, an investor extraordinaire, has got Disney in his sights. So I think we're about to see something that's not very much a fairy tale, but kind of a nightmare for Bob Iger. Here we go. Markets are always in flux. They're absolutely dynamic in that way, and navigating shifts and fluctuations require strategic and critical thinking. Today, we look at a disruptor and a profit seeker. His name is Nelson Peltz. Now, Nelson Peltz's recent moves will impact the way that the Walt Disney Company is being run. It's seeking to weaken Iger's power base. Peltz is seeking board seats to drive positive change, and he does this in pretty much all of the companies that he invests in. It's inevitable, like day following night. His firm, Trian Management, has been steadily increasing its stake in Disney, and it's now one of the company's largest investors. From the reporting we got yesterday by the great Valiant Renegade, he's essentially moved into 5th or 6th place in that regard. But why is he at it at all? Why is he going at it again? Well, earlier this year, Peltz pursued a board seat at Disney, advocating for a succession plan beyond the current and former CEOs Bob Iger and Bob Chapek, which that resulted in a complete clusterfart. Now, his initial efforts were met with an antagonistic resistance, but Disney eventually responded with some cost-cutting measures. And there were some other promises in there as well. The stock initially saw gains, but it has since declined, and that's from some pretty decent highs, but nowhere near where they were a couple of years ago. Now, Disney has been taking various measures to adapt to the renewed pressures of profitability, including cost reductions, ventures into sports gambling, which is not really brand friendly, and some potential shifts in its core business segments. Now, the company also plans to reintroduce its cash dividend and invest significantly in the theme parks and resorts. Now, as I'm familiar with those specific plans, I can tell you they're not that impressive. Anyway, Peltz's recent actions suggest growing impatience with Disney's current strategy, given his belief that the company shares are undervalued, hence his massive purchasing assault over, well, who knows how long. As such, Trian Management has been expected to push for multiple board seats, including one for Peltz himself. If their efforts are actually rebuffed, a proxy fight could ensue. Wait, let me say that a little more strongly. A proxy fight will probably ensue. Now, Disney is due to report its fiscal fourth quarter results in just a few weeks, just around the corner. And while Wall Street expectations show modest growth, analysts have been revising revenue forecasts downward. Despite this, Disney has been improving its cash flow and balance sheet, albeit there's a lot more room there for enhancement, improvement, whatever adjective you want to throw at it. But you don't want to look too deeply, because then you'll realize that the strike actually created the illusion of improved cash flow, and you'll start to wonder where they would be now without that long drawn out savings plan that the studios created for them. Now, Disney has to contend with this evolving situation. It's crucial for them and us, I guess, to monitor how Peltz's dogged pursuit of profits and potential board involvement might actually reshape Disney's future. Will non-core assets be divested? Could the firm's direction change significantly? Shareholders may face choices as they actually balance their roles between fans, of which there are fewer, and investors, of which there are, well, many that are more angry. Peltz's involvement introduces an element of uncertainty for Disney as a corporation, or at least how it's iterated at the moment. But it could also lead to fresh opportunities for shareholders that are not tied to a politically driven company. They're looking for something better. As Peltz and Disney's leadership grapple for control, the stock's performance will closely be watched by investors and analysts. An image of a financial tug-of-war is what comes to mind. No, I'm not a financial professional, nor should you follow any financial advice that's suggested on the internet. You should go find an expert that actually practices in this particular field. And with that caveat out of the way, I'm going to mention this. Experts say that current patterns suggest there might be a bullish reversal on the horizon. But to what end and why? Now, the dynamics of the situation, of course, are very fluid, and the outcomes always remain uncertain, but it looks like round 2 of the ongoing Disney-Peltz saga is just kicking off, and I'm not sure Iger is even ready this time around. He's not going to be able to fall back on the previous excuses. And with that in mind, I ask you, how might Nelson Peltz's renewed investment stake impact the future direction of Disney? And what are the potential implications for shareholders? All of them. With Disney's new rediscovered strategy, including cost-cutting and a very family-unfriendly foray into sports gambling, what additional challenges and opportunities, besides brand confusion, lie ahead for the media giant? Let us all know what you think in the comments section down below. This might be quite a fiery conversation down there, and I can't wait to participate. And of course, thanks for watching. Be sure to hit that like button and double check that you're still subscribed to this channel. We're shooting for that 15K, and I don't want you to miss any coverage, any live streams, any story clips, anything. Just make sure you turn that bell icon and get all those notifications as well. As always, take care of yourself, take care of others, and until next time, see ya!